Listen-only mode.
Hello everyone. Welcome to today's virtual conference, Windows into the IFIs, the Outlook for Economic Growth and Investment in Asia. My name is Emily Slater and I am the Deputy Director here at the Bretton Woods Committee. Windows into the IFIs is a new initiative being offered by the committee exclusively for our corporate partners and will feature quarterly virtual conferences on key issues in trade, finance, and development of interest to the private sector. This is the first conference in the series and will focus on the economic outlook for Asia in the year ahead. Before we get started, I would like to go over a few items so you know how to participate in today's event. We've taken a screenshot of an example of the attendee interface. You should see something that looks like this on your own computer screen in the upper right-hand corner. The orange arrow icon pictured here allows you to collapse and expand the control panel. By default, you have joined the presentation's audio using your computer's speaker system or voice over IP. If you would prefer to join over the telephone, just select telephone in the audio pane and the dial-in information will be displayed. Please note that if you join via telephone, you will not have the ability to pose questions. Currently, all participants are in listen-only mode, as indicated by the muted icon in the middle of your control panel. During the Q&A portion of the presentation, we will unmute individual lines so participants can pose questions. You will also need to ensure that you unmute your own microphone from your end as well via the control panel. The microphone icon on your control panel will turn green when your microphone is enabled. In order to submit questions to today's presenter, please type your questions into the questions pane of the control panel. You may send in your questions at any time during the virtual conference. We will collect these and address them during the Q&A session at the end of the discussion. You may also use the raise your hand function to gain our attention throughout the presentation. Finally, you may view today's virtual conference in full screen mode by clicking the blue square on the control panel. You can click it again to return to the original viewing preferences. I would now like to introduce Randy Rogers, the Executive Director of the Bretton Woods Committee, who will be facilitating this discussion and will introduce our distinguished speakers. Randy, take it away.
Thank you, Emily. Welcome, everyone, to our virtual Bretton Woods Committee seminar. For those on the line not as familiar with the committee, we are the network of prominent global citizens working to demonstrate the value of international economic cooperation and foster stronger, more effective Bretton Woods institutions as forces for global well-being. And we're pleased to have two experts with us today, who I'll introduce now. Dr. Joseph Zveglich, who will offer his insights into the forecast for economic growth in Asia for the year ahead, based upon the recently published Asian Development Outlook Supplement. Dr. Zveglich is Director of the Macroeconomics Research Division in the Economic Research and Regional Cooperation Department at the Asian Development Bank. He supervises the preparation and publication of the annual ADB Outlook and corresponding quarterly updates. Dr. Zveglich has held many other positions within ADB, including Principal Planning and Policy Economist at the ADB Strategy and Policy Department, Senior Advisor to the President, and Deputy Country Director at the ADB's Sri Lanka Resident Mission. He obtained his PhD and Master's from Harvard University, his undergraduate in Economics and Specialization in Asian Studies from Arizona State University. Dr. Zveglich, you're a fellow Sun Devil, so you have that going for you, as well as myself. I'd like to now introduce Sir David Wright, Vice Chairman of Barclays, who will offer commentary following Dr. Zveglich's briefing. Sir David Wright has been with Barclays since 2003, currently serves as Vice Chairman and Senior Relationship Advisor for the UK and Asia Pacific region. He is also the Chairman of the UK Korea Forum and an Honorary Fellow at Peterhouse, Cambridge, where he obtained his degree in history. His former experience includes UK diplomatic service to Tokyo, Seoul, Paris, and London. He was British Ambassador in Korea and Japan. Thank you both very much for joining us. Dr. Zveglich, take it away.
Okay, thank you, Randy. Thank you very much for having me this evening. It's now about 8 o'clock Manila time, so I hope that I'm catching you all at a good time. This is just a bit of background on the publication. Is our annual forecasts are produced in our Asian Development Outlook. We do forecasts for 45 developing member countries of the Asian Development Bank. And you can essentially think of this as Asia ex-Japan. So when I use the term developing Asia, it's a rather broad definition. It includes the 3 of the 4 largest economies in the world, China, India, and Indonesia, but also some of the smallest in the Pacific. And it also spans some of the former Soviet economies in the Southern Caucasus. So it's quite a large grouping. We produce our outlook twice a year. The main report comes out in March, April, and in fact our Asian Development Outlook 2015 will be out this year on March 24th. So while we do have our update that came out last September and a short supplement that we produced that came out in December, it's really our main report which will be coming up. So to some extent, I'll be giving our forecast as we saw things in December, but I can also give a sense of how we see things changing based on data that was not available at that point. Let's see if I have, there we go. So let me begin tonight with the key messages. Developing Asia's growth has lost some of its momentum in the second half of 2014. Our Asian Development Outlook supplement revised down our forecast from 6.2% in 2014 to 6.1%, and from 6.4% in 2015 to 6.2%. In the People's Republic of China, we're seeing that growth had moderated more than expected, but expectations do remain high for a reform-driven pickup in growth in India. Finally, inflation is expected to be lower than we had previously forecast. So turning now just to the overall forecast for developing Asia, developing Asia whole is expected to expand at a steady pace of 6.1% this year, matching the pace that it grew in the last 2 years, and picking up just slightly to 6.2% in 2015. Now there has been some downward pressure, so it's at this point there's probably more of a downside risk to our 2015 forecast than upside risk. And this is concur with forecasts for the major industrial economies, where growth is picking up in the U.S. more than we were expecting, but somewhat softer in Japan, and about what we were anticipating in the Euro area. So for the major industrial economies of the U.S., Euro area, and Japan, we're anticipating that growth last year will have peaked at 1.4%, but growth this year is expected to pick up to 2.1%. This is largely on the back of strong performance expected in the U.S. Our Japan forecast we brought up a tick in light of the fact that although there was a softer experience at the end of the year than we had previously forecast for the end of 2014, because we're no longer expecting to have the pull down on growth from the further increase of the value-added tax, we felt the growth would be somewhat stronger next year than previously forecast. I've gone too far. There we go. Looking across the subregions, latest GDP figures show South Asia growing at about 6.1% in this year. Southeast Asia about 5.1%, which is a slight reduction from what we were previously anticipating. Central Asia, a large drop there because of the drag coming from the recession in Russia. East Asia growing about 6.5%, in part because we had reduced our our forecast for China next in 2015 from 7.4% to 7.2%. And finally, the Pacific is the fastest growing region that we have, but that's largely due to a single large liquefied natural gas project that's going on stream this year in Papua New Guinea, which raises the growth forecast there to above 20%. And given the size of Papua New Guinea among the Pacific island economies, it has an outside impact overall. Turning now to some country specifics, the latest GDP growth figures from China show that there has been some progress made in rebalancing the economy. The government is shifting its focus from the quantity of growth to the quality of growth, which is a factor underlying this moderation. Authorities are dealing domestically with balancing credit, investment, and growth targets as it's continuing its structural transformation into a more modern economy. Now, it's important to note that, in our view, growth may be slowing, but it hasn't stalled. The 7.4% growth that China announced in 2014 matched our forecast for the year that we had published last December. Our forecasts for next year, however, are expecting a slowdown to about 7.2%. Based on some of the industrial production figures toward the end of the year and some expectations that authorities are going to be more willing than they had been in the past to allow growth to slow down, we may see further revisions to that forecast when our March ADO comes out. In India, confidence has been bolstered after the elections in May, and India is on track to reach the update forecasted growth of 5.5% in the current fiscal year, which ends March 2015, after expanding by 5.7% in the first quarter and 5.3% in the second quarter. The pace is expected to accelerate in the next fiscal year, driven by continued service sector growth and progress on reforms to supplement investment. The 5 large ASEAN economies have seen growth easing slightly, but we are expecting somewhat of a rebound this year. Our forecast in Thailand last year had been a lot softer than we were anticipating in April, and even softer than we were expecting in our September supplement because of the political disruptions early on in the year. And the bounce back with more stability in place not being seen. There has been fiscal consolidation in Malaysia that is slowing growth there. And in the Philippines, slowdowns in government spending due to some legal challenges on the capital expenditures has led to a much tighter, much slower investment growth overall, but particularly public investment. And finally, in Vietnam, demand has been somewhat softer. That being said, we are expecting a pickup in the large ASEAN economies to 5.4% growth in 2015. Looking now at some of the events that the region is facing, international oil prices, of course, have fallen substantially to below $50 per barrel in January, and are expected to remain relatively low as the supply factors appear to be the dominant drivers of the decline. The decline in oil prices does reflect a confluence of factors. Several years of increases in oil supply, particularly new oil sources such as the shale oil in the U.S., declining in demand due to the slowdown in particularly the developing world, and last November, a significant change in the policy objectives of OPEC, where instead of focusing on the price, they have chosen to maintain their market share, which had put quite a lot of pressure on the oil prices. Now, the impact of the price decline, from a developing Asia perspective, it's largely a positive impact. Consumers will have more money to spend. Governments like Indonesia, Malaysia, India can use this time to cut costly fuel subsidies. And even oil-dominated countries like Kazakhstan and Brunei, who will of course be feeling the pinch in the short term, can use this time to speed up plans to diversify their economies. In a way, it's a reverse of the Dutch disease syndrome, where a natural resource boom tends to appreciate the exchange rate, pushing out the manufacturing sector. With the price of oil dropping, the real exchange rate is depreciating, which should give benefits to the manufacturing sectors. We had done some modeling simulations, which we're further refining, but with what we had looked at, we were expecting there might be a small bounce back in oil prices this year, but that it would not be returning to the same levels that it was in July of 2014. And the impact overall on emerging Asia, if we take out China, would be to add about 0.7 percentage points to growth in 2015. PRC could add about 0.6 percentage points, which could help offset some of the expected slowdown. Now, these modeling results, I have to emphasize, have not been fully factored into our growth forecasts. So there was some attempt by our economists to think about what the impact might have been in December, but at that point there was not still the clear idea from a simulation point of view of how the impact of extended reductions in oil prices might fade out. So this is something that we'll be bringing into our forecast that will be released in March. So that gives us at least one upside factor to our forecast. There are, however, some negative effects. The increased market volatility is a challenge for macro management in many of our economies. And from a development bank perspective, the low oil prices may reduce the urgency to develop and install clean energy technologies, thus working against some of our other pillars of our policies, that being environmentally sustainable growth. From a macro perspective, though, falling commodity prices are having helping to keep inflationary pressures down. And it's not just energy prices that are falling, although they've fallen more sharply than others. Food prices have also been on a downward trend for the last several years. Moreover, if we look at actual demand versus potential demand in the large economies of developing Asia, we do see that there was still in 2014 a bit of an output gap, such that we aren't expecting the demand pressures there to be becoming inflationary. So overall, we expect that this will continue to temper inflation. We had forecast in December that inflation would fall to 3.2% in 2014 and pick up somewhat to 3.5% in 2015. But as with the growth figures, this had not fully factored in an extended period of low oil prices. So with the inflation, I think there's also a risk that a possible positive outcome in terms of lower inflation for the region. Developing Asia's current account balance remains stable. While demand for the region's export is improving, the trend in the current account balance is forecast to be flat, about 2.1% of the region's GDP in this 2014 and this year. And this overall surplus mimics the results that we're seeing in China, where the surplus has declined to around 2% of its GDP. So essentially, we anticipate that the rebalancing toward more domestic demand will continue in China. One of the risk factors that we had been monitoring was the question of how the end of quantitative easing and the change in U.S. monetary policy might affect the Asian economies, in part because of the major impact that just the talk of tapering had on Asian markets in 2013. So in contrast, though, when we start to look at what has actually happened since the U.S. has completed its quantitative easing, Asian financial markets have seen relatively unfazed. Reserves surprise markets with the talk of although interest rate premiums, bond prices, and stock prices have returned to their May 2013 levels, this has happened without a return of large inflows of short-term capital. So we don't see a likely repeat of the so-called taper tantrum. In part, if the U.S. monetary tightening were to surprise markets, it would be something that would be more about the timing and the magnitude, and not the question of whether it was going to happen. We've already built into our forecast a gradual increase in U.S. interest rates to begin around the middle of this year. So any surprise that might lead to an outflow of capital from the region would have to coincide with stronger U.S. recovery than we expected. And Asia seems prepared for the eventual tightening, and in part because we haven't seen a reversal of those flows, large flows of short-term capital. So we expect that a repeat of this taper tantrum will be unlikely. There are risks to the outlook. A lot depends on the pace of planned reforms. In China, the reforms are slowing growth, but they are setting the stage for a stronger foundation for growth in the medium to long term. In India, it's the majority government there should be in a position to push through unpopular reforms to support growth. Should that not occur, then that could be a downside risk to our forecast. But also, if we were to see the pace of planned reforms accelerating, in fact, there could be an upside risk there. Another possibility is weaker advanced economies performance. The concerns over Europe in particular a downside risk to the Asian markets. And finally, geopolitical risk may lead to oil price volatility. We're not expecting, because the price declines are largely driven by supply, and even then outside OPEC supplies, we aren't expecting to see a sharp increase in price, but uncertainty there may lead to certain volatility. We feel that these risks, however, are manageable at this stage. So let me close here with the key messages. Developing Asia's growth has lost some momentum in the second half of 2014, and our supplement revised down our forecast to 6.1% last year, and for 2015 down to 6.2%. In China, growth moderated somewhat more than we had expected, but we are still expecting quite robust growth there. Expectations, including our own, remain high for a reform-driven pickup in India's growth. And finally, inflation is expected to be lower than we had previously forecast. Thank you very much. And back to you, Randy.
Thank you very much, Dr. Zeglich, for the rich and insightful overview of Asia. I'd like to now invite Sir David Wright to provide a few brief comments and perhaps a question for Dr. Zeglich. This will be followed by Q&A from our audience. So if you do have questions, please ask them by typing them into the questions box in your control panel, or using the raise your hand function. Sir David, now to you.
Thank you very much, Randy. And Dr. Zeglich, thank you very much for an extremely full and comprehensive assessment, which I have to say mirrors very closely the judgments that we have all been making of the movements in Asian economies and the prospects. And I'm very struck by your paper, which uses the headline, growth hesitates in developing Asia. I think that word hesitates is very important because it doesn't imply any very strategic or substantial change which ought to be giving anxieties to people. The issues about Chinese rebalancing are ones that we've been familiar with now for a number of years. The new kid on the block, as you have just said, is the Indian situation post the Modi election. We still are awaiting that reform-driven pickup, but there is nothing yet to show that there is anything which is going to stand in the way of Modi's plans and the great sense of anticipation which exists in India. You know, a lot of people saying quite clearly that this is now India's moment. And your point about oil prices, I think, is important, not only in terms of the effect which they've had on subsidies in places like Indonesia, the effect they're having on reduced mitigating inflation, and also the fact that nonetheless there remains an anxiety that political instability might cause further volatility in oil prices. So could I there stop in terms of an assessment and ask you a question which reflects the fact that, as I was saying to Randy earlier on, I was in Davos last week for the annual meeting of the World Economic Forum, and there's no doubt at all that this sense of political uncertainty and the lack of clarity about future economic prospects was extremely widespread. And that, of course, is very relevant in terms of the demand potential in the European Union and in Japan. You pointed out yourself that pickup in the United States seems to be better. But there is this uncertainty. We've had the Greek elections and the results there with what they imply for the European Union over the weekend. I wondered if you could just expand a little on how you see these main economic indicators being affected by the political uncertainty, or whether you think that, for instance, in China and perhaps even in Southeast Asia, the economies are reasonably well balanced and reasonably well insulated against that political problem.
Okay. Thank you, Sir David. It's an interesting question. If I thought about the different political risks that there might be, I think the impacts would be through different channels. So if we were to start with the possibility of, again, a slowing in Europe and possibly even the uncertainty there, say, in an extreme case, leading to a recession again. What they had done last time in Asia was we saw a lot of movement of capital out as European banks were recapitalizing back home. We haven't seen a big movement of capital from European banks coming back. So I think the impact through financial channels would likely be muted compared to what we saw a few years back. But the impact through the trade channel could be quite important. That becomes a bit less sudden, though, in light of the fact that the weaker euro has already started to shift trade balances somewhat, although it's still early to check because of the delays in which we're getting the trade data, but that's the sense that European demand has already fallen off somewhat due to the cheaper euro. So we may see a shock there coming through the trade channels, probably less likely to see something through the financial channels directly from Greece, but it would be more about European banks and the channels coming through there. But that had largely been replaced by capital coming from Japanese banks, U.S. banks already. If another area that we've been watching closely is, of course, the recession in Russia, which is having a big impact, but it seems to be really isolated in the former Soviet economies, where the trading links there are stronger, and the flows coming from remittances are being weakened somewhat. So that is having an impact in our Central Asian economies, but largely going unfelt in the rest of Asia. So the impact there might be a Russian crisis. Again, Europe already struggling to return to growth, undermining growth there, having effects on Asia, sort of not directly, but through this secondary source. Middle East uncertainty, there couple of channels. One, of course, oil prices, but there's also a lot of Asian labor working in the Middle East. At this point, still, remittances seem quite strong, despite the drop in oil prices there. But that might be one area where if there was greater political instability, a move towards that would affect the hiring of foreign labor could have another impact there, as well as the oil prices. I have to say, on these last ones, we've looked at the price of oil, but not so much the direct links between the Middle East and Asia. So the kind of impact there, the magnitude, less clear about that.
Thank you.
But I think, thank you for that. I think that what you just said about the implications for remittances is an important angle which we would probably tend to overlook. So I think that's a very important knock-on effect of what looks like a benign outcome in terms of oil prices, which may have significant effects on the labor exporting countries of Asia. Randy, that's a very interesting set of additional points from Dr. Zeglitch. Do you want to open it up now?
Absolutely. For either of our panelists, if there are folks in the audience who'd like to ask a question, now is the time. Emily, do we have any questions at the moment?
At this point in time, it doesn't appear that we have any questions, so just want to remind our audience that you may enter your questions in the questions box in your control panel, or you may use the raise your hand function. So please, if you have questions, go ahead and do that. Since we don't have any questions, Randy, do you have any follow-up?
Yeah, I'll start with a question actually for both panelists, and you both alluded to it. Maybe you could expand a little bit more. I don't know if you subscribe to this view or not. Some have expressed this new normal, concept lately with depressed investment demand from the West and perhaps a secular environment of lower economic growth. And I'm wondering, as it affects Asian exporters, do you see, as sort of an equalizer, growth in interregional trade in Asia helping to offset this? And perhaps you can expand a little bit more on this rebalancing within China towards greater economic consumption. What are the signs we're really seeing towards this? I'm not sure. Is this a 2015 story, or is this farther out? And I finally wanted to ask on China. It seems like every so often the concern about credit bubbles and the shadow banking sector pop up, but that wasn't identified as any of your risks. It doesn't seem to be that time, at least in the media, where this is a concern to folks. But is this something underlying the surface that you're seeing as a challenge? Open to either of you.
Well, can I just say one thing about the new normal, Randy, and then I'll hand it over to Dr. Zeglitch. I mean, I travel very frequently out of Europe into Asia on a regular basis every month or so, and this new normal and what you describe as the effect on investment trends, the continuing high liquidity rates which are held by particularly European and North American companies because of their anxieties about investment prospects. That seems to be very consistent with what Dr. Zeglitch has been describing, because although you have the sense of optimism and expectation about the performance of Asian economies, and one has been able to see that over the years, I come back to that point I mentioned at the beginning, which is the word hesitates. We are seeing that sort of new normal continuing in terms of anxiety about the overall, about the medium to long-term prospects for investment and the effect that that is having. As for intra-Asian trade, that was, as we all know, one of the great developments of the last 4 or 5 years, and I'd be interested to hear what Dr. Zeglitch has to say about that.
Okay. All right. Thank you, Sir David, and thank you, Randy, for your questions. On the question of the inter-Asian trade, if we looked at before the global financial crisis, it was quite a lot of it was, of course, parts and components, and a lot of it was headed towards the U.S. and Europe. We have seen some rise in trade in final goods to China, so that gives some evidence that there's some rebalancing going on in China. So China is becoming more and more a driver of growth, but it's still not of the same magnitude and doesn't have the same impact as the U.S. does on Asian growth. So the World Bank report was talking about a unipolar world, and on that one I think we can maybe a bit parochial, but disagree or agree to disagree on that. Just the size of and magnitude of growth that we're seeing in China may be slowing, but it's slowing in favor of less investment and more consumption, and it's also starting from a much larger base in terms of the size of the economy. So essentially, if we look at contributions to GDP, still a sizable contribution of global GDP coming from China. So in some ways, I can subscribe to this idea of a new normal. I just may characterize it different. In China, they're characterizing it as a new normal where rising wage prices means that they can no longer assume that they can pull labor from the rural areas in order to boost manufacturing. Now it's going to have to be higher skills, higher value-added activities because wages are starting to rise. Even some Chinese manufacturers are starting to set up investment to take advantage of some of their low-cost neighbors. So the new normal is an area where we're seeing China grappling with some of the issues that come with being an upper middle income economy, of rising wages, and also of needing to think about higher skilled activities, higher value added activities. This will, I think, attract a different type of investment coming from the West, where the types of investments will be taking advantage of a large market, since FDI also tends to go where its markets will be, but also it will need to be a different types of activities moving beyond the low-skilled activities. So we do see some signs that China is becoming more of a pole, but there are plenty of challenges that lie ahead. So from that point of view, a new normal does seem to be a way to think about it. The credit bubbles and shadow banking, and here I'd have to say that some of the changes that the reforms in the finance sector that have been put into place and are being contemplated are having some positive impact, but it is the shadow banking sector grew quite rapidly, so unwinding that without leading to a collapse in the property sector or leading to big increases of non-performing loans, it is going to be quite a delicate act that needs to be done. But I mean, the deregulating some of the deposit rates, having sort of a direct impact in terms of bringing the funds back into the light, if you will. This move coming up to put more local government spending on budget instead of off budget may actually, at least on paper, increase the overall fiscal deficit, but will also be, because we're measuring we're seeing more of what we can measure, and so I think there will be some adjustments here in the coming year, but just looking at the statistics without having the background on it might be a bit deceptive. So for us, the credit bubbles, or the possibility of credit bubble and shadow banking, they are issues that are well known. and some of the reform measures that have been mooted would have a clear impact in terms of unwinding them.
Do we have any questions from the audience, Emily?
We do. We have a question from Mr. Warren Embledge. Mr. Embledge, I have unmuted your microphone. Please make sure that it is unmuted on your end so that you may pose your question.
Yeah, can you hear me, please?
We can hear you.
Okay, thank you. I'm an investor in Laos, and I'm interested in your thoughts on any plus or minus macro conditions that may affect investments in Laos.
Okay. Well, here I'm going to actually have to look back at our report. So in some ways, it's probably good that I've ended up in my office instead of in the conference room. Because for our updates, our supplement, we actually did not update our forecast for our forecasts for the smaller economies. So our latest forecasts are in our update that came out last September. Okay, so in Lao People's Democratic Republic, looking at that resource development was what was continuing to be the growth driver there. With growth expected, continued robust GDP growth of 7.3% and 7.4% in the next few years. We were seeing some slowdown in tourism and fiscal problems that had forced the government last year to put delays in wages and payments. But we're still seeing relatively relatively quick growth there. And this is largely on the back of mining and investments in mining and hydropower.
Okay, thank you.
Emily, do we have other questions?
No, at this time we do not have any other questions. Randy, I don't know if you would like to ask a final question. Sir David, go ahead.
Could I, Randy, raise just one little qualification over what Dr. Zeglich was saying, which I think is that although this is an ex-Japan survey, I think in relation to instability and anxiety and potential political problems, there has been a welcome set of developments in Northeast Asia for over the last 6 months. I mean, if we were to go back a year, I can remember being in Davos a year ago when the whole question of the South and East China Seas was a fundamental issue of potential instability. What I hear from those I talk to is that there has been a certain amount of very cautious second-tier diplomatic activity out of the limelight, out of the focus of the media, which has to some extent sought to ease the situation between, on the one hand, Japan and China, on the other hand, Japan and Korea. And that, to me, seems to indicate a much more benign situation in that part of Asia, which, of course, is so important in terms of the effect of internal demand on intra-Asian trade. That to me seems like a welcome phenomenon which one would like to see continuing.
Sir David, do you see progress in Abenomics or signs that the structural reforms are actually taking root?
I was at a lunch yesterday, Randy, when we spent a lot of time talking about this. I think that one of the reasons why the Prime Minister decided to go back to the country in December was that, to some extent, the drive of Abenomics, having had much success in terms of the first and second arrows, that drive had stalled rather in terms of the third arrow. We all know that the third arrow is the most difficult, but equally to some extent the most fundamental for the future of the Japanese economy. What I think we have to see now, what I think we have to await now, is some indication that the Japanese authorities are prepared to try to find ways in which they can activate their commitment to getting more women into the Japanese workforce, which remains a relatively underdeveloped feature of the economy, even since the Abenomics proposals came out. That they ought to be more innovative in ways in which they can promote the arrival and use of foreign labor without getting themselves into what I know is their main anxiety, which is any damaging effect on the strong homogeneity of Japan. And then thirdly, I think that there is a growing sense on the part of the government that within the third arrow of structural reform, it is very important that the government should be doing more to drive forward new entrepreneurship by young developers, young investors, young technicians. They have the people there who are able to do it. Maybe they don't actually have the same operating environment in which to make the same success of that as has been seen in the United States and in European economies, particularly on the part of the role of universities to act as core centers of developing research, which can then be materialized in terms of products which will enhance the overall health of the economy. That's where I see it at the moment. So I think the short answer is that I think the jury is still out on this the second period of Abe's prime ministership, or recent prime ministership. This is in fact his third prime ministership. But this is well recognized amongst those in Japan who wish to see change.
Thank you.
Just, I guess, commenting on your point about the level of tension between Japan and China and Japan and Korea, I would agree that it seems to be have gone down to a much lower level. I was in Osaka talking to a business group in November, and had been talking to that same group a year earlier when the tensions were at their highest, and they had also noticed that quietly business was able to go back to normal. And in fact, even at the height of the problems, what businessmen were saying was it was more that Japanese branded goods might be having trouble, but if you were parts and components not necessarily branded as Japanese, business didn't change that much. So it was more that anything that could be seen as symbolically Japanese became a bit of a target. But even that seems to pass relatively quickly, such that at the current stage it's not affecting business activities. But we did at least see some, at least tentative diplomatic moves at the APEC meetings as well. Yep. And I think that was telling in its own way, almost as though even if things weren't likely to get better, that there was some tacit agreement not to inflame things. So the feeling that I've had in the region as well is that this tension is largely lower than it had been.
I agree with that.
Great. Emily, one more ask for the audience. Do we have any other questions?
No, we don't have any other questions, so if you want to finish up with any final questions or comments, and we are getting close to running out of time, so we can wrap up after that.
I'll ask one final question. We had our State of the Union speech last week here at the Congress, and the President spoke of trade promotion authority in order to revitalize negotiations for trade, particularly with the Trans-Pacific Partnership and the Transatlantic Trade and Investment Partnership. I don't know if either of you follow these trade agreements, but I'm curious how you view prospects for the TPP, and do you think South Korea or China will eventually join the negotiations?
Just on the TPP, certainly there's a lot of hope in Japan that will be one of the components, I guess, of the third arrow of Abenomics that might see some more direct benefits for Japan. Of course, Korea and the U.S. had signed a bilateral agreement not long ago, so the benefits that they might see would be less than they would have been if we were looking about 5 years ago. But of course, TPP includes quite a lot in terms of services. It does seem, though, that again, agriculture tends to be the one that's one of the more difficult aspects to get through. In terms of the prospects, I would have to say that these still seem to be a higher probability than a further global multilateral agreement, as we're seeing that even what was able to be agreed under the WTO, even that has stalled in the end. So a bit more promising on that side, these large mega blocks. But even there, a lot of the same issues seem to come up, but just on a different scale.
I agree with that, Dr. Ziglich. Randy, I think that you're right to raise it, if I might say so. I think one of the most significant features of Abenomics in its first period was that the Prime Minister and his cabinet tackled some of the residual resistance to the TPP, which looked very welcome at the time. I would say that one of the things which I'd be looking for under the new Abe administration is a relaunch of that process, because there's never going to be a time in which a Japanese government has a more potent political position in which to be able to tackle some of those residual and protectionist pressure groups. The TPP is not on its own, of course. I mean, the trade agreement which has already been signed between the EU and Korea is operating. We're still negotiating a trade agreement between the EU and Japan, which will be very important, quite difficult to achieve. And then, of course, there is the transatlantic partnership agreement, which is, I think it's probably fair to say, stalled at the moment because of opposition within parts of Europe. But these are measures, these are initiatives which could add a great deal to global trade growth if they can be achieved.
Great. Well, Emily, I'll pass it over to you if there are no more questions.
No, we don't have any more questions, so I think we can go ahead and conclude our Windows into the IFIs virtual conference today on the outlook for economic growth and investment in Asia. I want to thank you all for attending, and I want to give a special thanks to Dr. Joseph Zeglich and Sir David Wright for their insightful thoughts and dialogue. Once you leave today's webinar, you will receive a survey on the presentation, and we would greatly appreciate it if you would complete the survey to provide us feedback for future sessions. You will also receive a follow-up email within 24 to 48 hours with a link to view a recording of today's virtual conference, as well as my contact information if you have any additional questions or comments. On behalf of the Bretton Woods Committee, thank you for joining us today.
Thank you, Emily. Thank you, gentlemen.
It's been a pleasure.
Thank you very much.
Thank you very much.
Have a good day.